Preston of Resource Maven. We're here at the Metals Investor Forum in Vancouver in January, and I'm joined by Rob Cinits of Entree Resources. You know, in the Maven portfolio, we have a lot of exposure to gold and a lot of sort of early stage, high risk stuff. Added Entree to the portfolio not that long ago for a couple reasons. I really like copper, and I wanted something that was considerably lower risk than a lot of the other options that I have in the portfolio, and Entree fit that bill. So it's a complicated story. Let's take a stab at quickly explaining what this asset is that Entree owns in Mongolia.
Okay, I'll do my best here. In a nutshell, we have a joint venture on a portion of the Oyu Tolgoi project in Mongolia, which, when in full production, when the underground block cave comes into production, this will be the world's third largest copper mine.
Which is, I mean, that's massive. This is a massive mine under development.
It's massive. So to be clear, we don't have a joint venture on the entire project, but this is such a huge system that extends for more than 12 or 13 kilometers in strike length with some incredibly high-grade copper-gold porphyries. So they extend off the north and south boundaries of the ground that's held 100% by the joint venture between the Mongolian government and Turquoise Hill Resources onto our ground, which completely surrounds it.
Right. So, in the ground that surrounds it, that you guys own 20% of the ground that surrounds it, which includes one part of a deposit that's already in the mine plan. It's basically in development already. That's what we call Lift 1, the Hugo North Extension. So you just recently wrapped some numbers around what that's going to mean and some timelines around that portion of your asset. So talk about the what you know is happening, which is the Hugo North Extension.
Absolutely. So it is a reserve and it is in development. Rio Tinto is the operator of the project, so incredibly de-risked in that regard because you have a world-class operator like Rio Tinto. They are currently developing, well, let me step back a bit. They raised close to $5 billion to develop this through a consortium of world banks and started that in 2016 underground and are sinking 5 shafts in total and a ramp which will be used to transport the material from this block cave to surface to the plant. The underground development, in a block cave, development takes a long time to build all of the underground infrastructure. Once you start it, there's very little work to do other than to haul it to surface. That development is marching towards our property boundary and will cross onto it in 2021. Shortly thereafter, when the block cave is initiated on the Oyu Tolgoi property, it will migrate onto our property about 2026.
Right. So by 2021, even just on a development scale, you will be in production. Your 20% stake will be producing some cash flow, and it will continue to do so, guaranteed over the 14-year defined mine life of that portion of your asset. So talk about the numbers, like the cash flow and whatnot around that.
Yeah, so in the reserve, right now we have an MPV of $111 million, which just includes Lift 1.
Yeah.
And this is why we were very anxious to get this report out, which I'm sure will lead into one of your next questions. So it's a small piece of what our overall mineralization is. It's about 35 million tons in the attributable to the joint venture, close to 2% copper equivalent that's going to be mined. And like I said, attributable to Entree, that brings us 111 million MPV discounted to today. And every year or every month that goes by, that will improve as the time is being lopped off of that.
Right, and so that's just the one, that's what's in the mine plan, it's the reserve case. The much bigger picture includes if this little Hugo North part that's in the mine plan gets into Lift 2, which is farther north onto more of the ground that you have a stake of, or if it starts to incorporate Heruga, which is the deposit that you have a stake in to the south.
Yeah, so Lift 2 is immediately below Lift 1. It's not actually a separate deposit. It will require some new investment decisions to be made and some more capital. However, it's immediately below. It's roughly the same grade. So that is their next logical place to develop. Once they get underground, they're going to finish off all of the drilling and geotechnical and engineering studies to bring that to a reserve. Because of the orientation of the deposit, lift 1 is quite small for us. Lift 2 is a much larger piece of the overall pie, and it will bring us an incredible increased amount of value. So we ran a PEA quite recently, which includes lift 1, lift 2, and as you said, the blue sky, the Heruga at the far end of the line of deposits. And that brings us $278 million of MPV. Of that, almost all of it is attributable to lift 1 and lift 2. Heruga, because of the discounting, the way material is discounted, brings us no value. But it's interesting to show the long life potential of this, which is more than 66 years of production years that are attributable to us. And that's more, it should be more treated like an annuity rather than an MPV.
So that, I mean, I think that brings us to, obviously there's a huge number of details here, a lot more information that we could try and pick apart, but in the interest of sort of capturing what the opportunity is here, you say it's more like an annuity, and that's really the thing. Oyu Tolgoi is going to be the 3rd largest copper mine in the world. The opportunity to get your teeth into any part of the 3rd largest copper mine in the world that's a rare thing, and that's what Entree has. The reason I like the Entree story is it's very de-risked because Rio Tinto's the operator. It's de-risked because you have the capital to develop it. The partners have to loan you that capital at a very good rate. It's de-risked because the Mongolian government is already a partner and they're very incentivized to have it work. And I think this is an asset that there are a lot of other companies out there that would be very interested in owning cash flow from this massive copper mine for the next 7 decades.
Absolutely, and I'm not saying that we're out trying to sell our interest, but we will listen to all different companies that might have an interest to participate in this. And this would include royalty companies, because an opportunity like this is very royalty-like in that we don't actually have to come up and raise money, capital to build this. It's all debt financed that prime plus 2 by our partners, and we only repay out of 90% of free cash flow. And then you look at the de-risked aspects that you've talked about. It has royalty-like aspects to it that could be interesting to various different companies. And we also take product in kind at the end. So there potentially could be metal traders that could be interested in something like this. So.
Yeah, no, I think the list of potential suitors isn't short, and that interest level will grow with time as the production draws nearer.
We sure hope so.
Absolutely. Thanks for watching. This has been Gwen and Preston at the Metals Investor Forum.